like even with your trades, what was that one trade you were telling me they had the Bitcoin, the MS?
You're
Remember
asking
that
me?
trade? Yeah, remember the trade you're telling me about on options? They had the Bitcoin in there.
Oh, yeah, yeah. That's MSTR.
MSTR. So let's say we're on MSTR. Let me see. So if we're on MSTR, right? And you could take a screenshot of this. See, look, it's been telling us it's going down. That's valuable, right? On the options.
Yeah, it is.
That's for the day. So that really went down. But then if we look at the 4 hours, it's telling us it was going down. Let's see. Look at this gap right here. It went straight down. Now it's telling us it's going up right here. So buy. That's on the really good strategy. So this would be a good time to start buying it on the 1 hour.
Yeah, also check out the other one that has super high volume is BMNR. So MicroStrategy is the highest.
BM.
BMNR. BM, like Mom, Nancy, Robert. Yeah, that's
Bitmine,
it.
right?
Yeah.
Okay.
So these guys are the largest holders of Ethereum. So it's what they call a proxy for Ethereum. And both companies, MicroStrategy and Bitmine, what they're doing, well, Bitmine is different. Ethereum, you can stake. So they're staking hundreds of millions, and they're getting about 3.5% yield. They have no debt. They are the largest holders of Ethereum on the globe. MicroStrategy is the largest holder of Bitcoin in the world. So they're both called what they call treasuries. They can literally raise funds by offering a certain yield if you come buy their shares. So for example, MicroStrategy, this is actually really interesting for your community. If you go to their website, MicroStrategy, there's a fund called STRC. So go to their go to their website. I'll show you something that's mind-blowing. Yeah, there you go. And then go to let's see,
Partners.
No, resources, solutions, or just actually scroll down on the website and look for STRC. It's their, keep going. Type in, if you could, on a search, type in STRC space yield on the upper on the search bar in the
on the regular search bar. Okay.
Yeah, type in STRC, which is called stretch, and then dividend or put in. There you go. There it is. It's 11.5%. That's what they're offering. So you're literally making 1% a month. Each share is roughly about $100. So if someone just wants straight, forget it, set it and forget it yield, which is going to be better than the S&Ps, you can do the stretch. You can just buy stretch SCRC on the shares on any exchange.
My wife, she works for Prudential. She trades for them, and they get her stock every month. And they got two stocks they always keep on getting as Blackrocks.
Yeah,
do you have BlackRock?
Yeah, theirs is called what is it? BITI, I believe, BITI, but it doesn't come close to to Michael Saylor.
Wow. That's so cool.
The other world that no one knows about, they're called closed-end funds, CEFs. So if you closed-end funds, basically they're managed by a manager. They take 5% of whatever it makes the profit, and they give back to the community 95%. So Blackrock, there's about 400 to 500 funds. So if someone wants to really grow their wealth and not, obviously trade futures all the time, the most consistent and conservative is the closed-end funds. It's a well-kept secret. Yeah, there you go. CEF Connect. It'll give you like the best. So some of the funds we're talking Jabelli, we're talking Blackrock. There you go. And you can actually scroll for the best funds with the highest yields or the most consistent, but some of these guys have been around for decades. Most of these stocks, if you can believe this, they're anywhere between $5 to $20, $30. They're really inexpensive. And some of them are, like 8%. Some are up to 30%. Case in point, there's one called it's the Cornerstone Fund. It's called and it's both the Nasdaq and the S&Ps. So the ticker on them is CLM. If you want to look that up, CLM. Yeah, there you go. Okay, so I will tell you a trick here. So look at the chart there. They have something. So if you want to have exposure to, let's say, I think CLM is the S&Ps. You're buying the shares for $8. And notice the line below that is $7. That's called the NAV. So what happens if they pay out roughly about 20% per year? So you're getting that on a monthly basis. And if you put an auto drip on the accumulation, like a compound interest, what it'll do is at the end of the month, the last day, it will pay you out the net yield divided by 12, obviously, roughly about 20%. And then if you have it on auto drip, it will allow you to buy the shares. It'll drip and buy it at the NAV, which is about a 15 to 20% discount. So you're compounding in two different ways.
You're compounding and you're getting it at a cheaper rate.
Yeah, so it's a yield of roughly 20, and the NAV discount is about 20. This is one of the best. CLM and the other, its cousin is CRF. So one's the Nasdaq and the other one is the S&Ps. They've been around since 1970.
And the other one's what? CRF?
Yeah, CRF. Same place, Cornerstone Fund.
This is deeply inciting. Thank you so much.
Yeah, as wealth accumulates, you guys, this is the kind of stuff you could throw money into, where it's kind of like set and forget it. It's a managed fund. Everything's about compound interest. So the closed-end funds are arguably the best places to buy your shares. They're managed. 95% get of the profit gets back to you and the other shareholders, and they don't go bust. They're very conservative. I'm going to show you one that's in cents. I'm opening my computer 1 second. It's a $5 fund. Let me see, Hank. Let me use my Gemini 3.
Yeah, I love that AI, brother.
Let me
You
see
can
here.
use it on looking at these stocks too and all this stuff, man. It's crazy.
Okay, so on Gemini, I'm going to put highest yielding, which you're on the right side. CF Connect. If you do a search, you can also find. But I'm going to cut through this. Highest yielding closed CEFs as of today.
Wow.
Okay, so here's let me see. So listen to some of these funds. Here's Guggenheimer. That's one. You've heard of PIMCO?
I heard of Guggenheimer. I haven't heard of
PIMCO. PIMCO is the largest asset manager of bonds in the world. They're out of Orange County. Let me see.
What's their ticker?
Well, here's one of them, PDI. So current yield is about 14.5%. And you have access to the bonds, the bond market. Type in GOF. This is one of the best. GOF.
I'm gonna have to put our conversation. We gotta do like a weekly podcast, man. And then I'm gonna record it and then put it in the back because this stuff is so vital. This is stuff that people don't really hear about, brother. Except for if they're on your level that you're on.
Well, it's community, you reap what you sow. So I'm like you, I like to share info, but you have access to Guggenheimer, which is one of the biggest funds.
Is that right here what this doing a yearly?
Yes.
Wow.
And look at what the
17%.
shares cost. You're in the shares for $13, $12.50.
Yeah.
Here's one that'll blow your mind. Type in OXLC.
OXLC.
This is one of the highest. Yielding.
46%.
Yeah. And look at the share price on these things. So this thing was at $5 not too long ago. It's at 10. This is one of the best for the least expensive. Like if you want very.
How long has this been around?
Decades. They've been around like 50 years.
Everybody should put their money with these people. This is a whole nother level.
And this is actually much safer than buying an ETF.
Wow.
So yeah, there's about 400 to 500 closed-end funds. But like if you wanted to grow your wealth as wealth is coming in, it doesn't hurt to put a little bit into closed-end funds.
Yeah, I agree.
But yeah, you went right to the right website. That's the main website. The CF Connect will give you, like if you go to the home page, it'll also tell you like the most popular. Let me see where it is. There's right in the middle. There's closed-end fund market update. Yeah, go on that.
I want to read some of these articles.
Yeah, there's another one that will show you like the top.
Do we have to have a financial professional advisor to buy this stuff, or we could do this ourselves?
No, you buy this on Fidelity, E-Trade, anywhere.
You do got to be careful because some of these closed-end funds, their yield is giving you back principal, and when they have a share price drop, it's a dangerous game. It's not quite as cute as he's saying. You just got to be careful.
Yeah, obviously there's things on every component, but for example, some of these are what they call ROC, return on capital. So the yield that you get, technically, you don't have to pay tax on. This is not financial advice, but if it's like a certain, there you go. I don't know, as far as I've seen, this is arguably the best, like for value-wise, they're tremendous as far as, like, all of these have monthly dividends. I don't think any of these are weekly, but they're paying you every single month. They've been around for decades, and they're, I'm going to give you, like, you guys all know Blackrock, right?
Yeah.
Okay, so I'm going to type in what is the main Blackrock.
So was that Paul? I'm sorry.
Yeah, it was Paul. So I follow a lot of these, and what happens in some of them, I don't know about the ones he just mentioned. I'd have to research it, but they pay back your principal as yield. I don't want to call it a Ponzi scheme. It's not, but it smells like it a little bit. But what it does is it weakens the fund, and then when people see the share price dropping, it's super volatile, and you can lose 70% of the share price overnight. So you put in 100 grand, now your 100 grand's worth 30 grand. So yeah, they're paying you this 40% yield, but you just had a 70% loss.
Yeah. The higher the yield, obviously the greater the risk, but we're talking about
it's not they're not paying an interest rate necessarily. Part of the yield is your principal. So you're kind of getting head faked. Wow, I'm making 40%. Well, no, you're not, because they're actually giving you back part of your principal and calling it yield. You got to understand it before you put any money in it. I'm warning everybody. I've seen people get destroyed.
Yeah, but obviously I'm talking more conservative, like somewhere between a 10 to 15% yield versus a 30 to 40% yield. And those, you can actually look at their history where they've been for years. So for example, Blackrock, you can type in BCAT, B-C-A-T. This is a Blackrock fund managed by Blackrock. The distribution's 21%. BCAT.
Oh my gosh, what is happening?
You can put these in municipal, tax-free as well, like a BTT. Those aren't going anywhere.
Oh, this is making 20% a year?
Yeah.
So how much of the print? So let's say we put 100,000 in. Are we going to have 120,000 at the end of the year? If we do the drip, we'll have more than that, right? Because but then some of it is the principal coming back to you too. That's what
it just depends on the fund and how they pay their yield. He's right. He said it earlier. Like the higher the yield, the more they're paying back your principal, and then they're going to tell you, well, it's not taxable. So you're getting income that's not taxable. Yeah. It's not taxable because you're just getting your own money back.
Yeah, so
so you just got to be careful. You got to understand what you're buying. You just got to be careful. Now there are ones, like he said, that are like 8%, 10% that don't pay you back your principal, and they're just paying dividends basically. But the S&P 500's been averaging 15% a year, so why wouldn't you just do that? So I don't know.
Right, BlackRock, so my wife with Prudential, they give her stocks, and they give her this one right here. I've seen it. It was like 20%, but then it's compounding because she keeps on buying more of it, and it's crazy.
Okay, so I'm going to tell you, because you asked, not everything has a discount. See the middle aisle called the net asset value, NAV?
Yeah.
Notice that price is higher than the share price. So you're actually paying a premium if you get into this one versus like a CRF or CLM that has a discount on the NAV. That's where when you drip, you actually get a discount on what you're dripping into. So that's to answer your question. So they're not all below, the NAV is not below the share price. Some are higher, so you're paying a premium. Some are lower. But I can tell you this, there's municipals, tax-free. They average, I think, anywhere from 5 to 8, 9 municipals, I think, are arguably the safest thing around. It's basically the city, the county, the state paying you. There's dozens of them. So like if someone wanted, and you'd never put all your funds into one. Obviously you diversify. Maybe you put it into, if you had 100 grand, I would do 10 to 20 different ones. But as far as managed funds, personally, it's my opinion, and I get it. It's nice to have a different point of view like Paul, but I think managed funds, you cannot beat the closed-end funds, especially ones that have been around for decades and have stability, and you can easily go to and check out their history over the last 5-10 years.
See, this is the stuff we need to know, because we need to understand, like me, I come from real estate, right? So I accumulate, I'm trying to buy properties, but properties are horrible right now to get, but if we could throw in money at different places, some people want to buy a restaurant. Well, restaurants aren't doing good right now, furniture companies aren't doing good. Like some of my friends, the ones that are making millions of dollars in other industries, everything is kind of messing up. So we need to find out as a community things like this. And Paul, we could open up this for you too, because me and you talk all the time, bro. We're in some deep stuff, bro. So I know I know we're trying to get some $1 million deals already, me and you, hopefully it's $1 billion deal. But it's like we need to be able to teach people this, because this makes you trade better.
We do. So what's really interesting, and he's right about the drip and the compounding. It's a little bit like watching grass grow in the beginning, but I have friends in the mortgage business who never did their 401ks, didn't put their $2,500, $3,500 a year in an IRA, and then fast forward 30 years later, and they've made more money than me in mortgage. They're broke. They're literally broke. And my wife and I looked at our 401ks and IRAs the other day, and we said, thank God we didn't buy the boats, and we took 1 vacation a year instead of 5, and we put the money in savings, because I just got a dividend payment off one of my Fidelity accounts yesterday. I got $12,000 dividend just off of one of my accounts for the quarter, and then today I'm going to go buy NVIDIA with it. It's free shares. My cost basis on that stock is 0. And so the power is time.
Yes, what we could do over a long time. Like, these are the strategies. I'm gonna tell you, I made a lot of people a lot of money, but people that don't come from a background of knowing stuff like this, what they do is, some of my friends and stuff started buying Gucci belts and cars and houses, and didn't know what to really do. They didn't know how to invest any of it. And then I'm like, 5 years later, I'm like, what happened? He's like, man, I lost it. I couldn't pay for the mortgage. They took the car back, stuff like that. So, some people, like NBA players and NFL players, you see it all the time. They make millions and millions. 5 years after the league, they lose it all. But there's a guy named Allen Iverson that I knew, right? There's a guy named Allen Iverson. What he did is he bought annuities with his money. Like the investor guy that they put with him told him, they said, buy annuities. So he had all these annuities, OJ Simpson, annuities, but a lot of people, they just get in and they start buying all these cars and buy all their friends and their moms the houses and stuff, and then they don't have anything at the end of the road. So we need to know about annuities. We need to know about these closed ends. I didn't know about these closed ends. This is something totally new. We need to know about different things, because I believe everybody that learns how to do this Forex is going to make This is like another way to make money. I don't know any other way. Options seem really good, but I'm telling you, people can learn how to trade for 3 months and change their whole life. I'm just trying to explain that with Forex. It's crazy. But what do you do when you go way up? Are you just going to start buying everything and start wasting your money? Are you going to start trading higher lot sizes and end up losing all your money? Because I'm seeing like the kids that are making all this Forex money. I mean, this guy I'm watching, he's traveling around everywhere and he's up in the clubs and stuff. And it's like, bro, at the end of the day, you're like buying all this Louis Vuitton and yeah, the money looks good, but how about if it comes back on you? So we got to know stuff like this. Like, let's throw our money over here on these close in. Let's put some money on this. Let's put some money on this. We need to know because, you and Alex have been raised different. I've been raised different. My mom was into real estate. We owned apartments when I was a little kid. We owned all these condominiums and houses. So I was raised different. The stuff my mom told me how to save and stuff like that. But the average person doesn't understand none of this stuff. All they're trying to do is trying to make some money to pay their bills with Forex. But hey, how about when you make $1 million in Forex, what do? I mean, it would blow their mind if they got $1 million.
Diversify it. It would.
Yeah. So I'll add this to the equation because, by the way, Paula, I'm a mortgage broker as well, of like 30 years. So, and you're right. Some of these mortgage brokers, they make a ton of money, and the whole landscape is having a long-term view on like what you're going to be, where you're going to be when you're in 20 years, 30 years. Dollar cost averaging, DCA, into funds like some of these Fidelity and Vanguard funds, some Charles Schwab, those are the top 3, especially Vanguard, Fidelity. I would just Google top 5 funds to invest in on Vanguard and on Fidelity. It'll tell you, and you dollar cost average on a monthly basis. Those things, especially like, for example, probably the most famous is the VOO. That's the kind of like the S&Ps, but the other one Charles Schwab has is SCHD. That one only yields about 3.5-4%, but it's growth, and it makes a ton of money over the long haul. So I'd say those are comparable in some ways to these closed-end funds.
It's funny, Lonnie, I wanted to start a consulting business for these NIL college kids who now are getting $1 million paychecks.
Right.
And it's like if they invest this money right and then go to college and maybe they play in Europe, maybe they get an NBA contract or NFL, who knows, but they're getting $2-3 million from NIL in college now. They're getting paid.
Right.
And no one is helping them. I went to my school, Seton Hall, and said, "Hey, can I mentor these kids and tell them what a closed-end fund is and what a drip system is and reinvesting? Can I do a free seminar? Because they're all going to be broke." Because I'm not kidding you, it's like the Mike Tyson syndrome. All their aunties and their cousins, they all want a piece.
Yeah.
So they have these entourages now, and they all want a piece. And bro, you tear an ACL, you're done. It's over. And what'd you do with the money?
Yeah. You know what's bad too? It was so funny. Like, okay, in San Diego, I used to be a high school basketball coach when we won championships for San Diego High. And so I got in this thing where I know all these people that I grew up with that are coaches and stuff like that. And a lot of, like, 3 of the coaches that were winning football coaches, they became agents. Like they're just, they got some kids that they got that were really good. They won the championships with them, and they became those kids' agents and stuff like that. So it's like, man, this is a money grab. But I know those people, they were just like, high school teachers and stuff. It's like, or just a coach that was good at coaching. Like, how is that person going to teach you how to save your money and get you into deals and stuff like that? It's like, it's a money pool. And the only thing that I like with me, right? So if I was doing long-term stuff, like you guys were saying about the US 30, and we were talking about, the S&P, everybody loves it. The SPX 500, we all know that because it goes up every year. But Like, let's just say we were in a stock that, has the Dow or something. If we would have been in this stock right here, the US 30, if we would have been in this indice, right, and put in $1, had like a $10,000 account, put in one lot size, I mean, we could have made $100,000 on one lot size for the whole year. So if you just stay in a trade for like a whole year, bro, that's crazy.
That's
like, all
crazy.
you put in $10,000, you put it to the side, you don't touch it, and you did one lot size trade. As long as it doesn't go $10,000 down, you just made over the year $100,000. See, that to me is the way that I look at these things, and I'm saying, and so Forex makes so much more money, but we got to take this money and then put it into some stuff that, we don't have to look at.
That is more conservative.
Yeah. But
Yeah.
think about it, like, okay, you put in 10,000 in the US 30 for the year, and you make what? You make, about 1,200, maybe something like that. But if you put it in here and you know how to trade it for one lot for the whole year, you made 100, you made 10 times your money that you put in. That
So, Lonnie,
to me is wild.
Lonnie,
Uh-huh.
you want to put all your money into index funds. They're the most
Yes.
conservative. And the closed-end funds, by the way, I'll make a case for them. Some of these closed-end funds have 200 companies in them. Some have close to 1,500 companies. You're covered across the board. When you go into one stock, yeah, it can explode one way or the other, like NVIDIA. It's a $5 trillion company. But you've got to be a stock picker to do that. So index funds, dollar cost averaging into index funds on a monthly, weekly basis is the way to wealth.
Wow.
I'll give you my three favorites though: Oracle, NVIDIA, and Apple.
Why
about
Oracle?
Oracle, because they are building, they're secretly building these infrastructure hubs for computing power for AI. And so they're quietly, they're going to be the provider of infrastructure for AI, because AI consumes so much energy, and it's so technologically advanced that a lot of companies aren't up to speed. Oracle is like the king. They're like the Apple iPhone of AI infrastructure.
Right.
And I mean, Oracle, a company like Oracle, you could do a 2-3x this year on Oracle in the next 12 months. Like that's how fast they're growing on this AI infrastructure. And then people are trying to say, well, AI is going to die and it's kind of a one-trick pony. No, it ain't. It's the best thing I've ever used.
I know.
Like that ain't going away.
Yeah, so
Yeah,
Oracle, and who else? NVIDIA.
NVIDIA, Oracle, and Apple are just
Apple.
like...
Why not Google? Why not Google and Amazon?
Google too, and Meta too. Like those would be my top five. And
I would
Microsoft.
Google for sure. But I would also, the sleeping giant is Amazon. Amazon today, like they had their earnings a week and a half ago. The stock dropped from 224 to 207. It's the best buy of any Mag 7 by far. They have 1 million robots. They have so much technology. They're prime deliveries. They're going to have literally self-driving cars that are going to be delivering the packages to you in with robots and drones. So
That's amazing.
They're going to turn the ship around. So Amazon is the sleeping giant. Amazon, Google, yeah, for sure, NVIDIA. Apple, it's a three-legged pony. They got the iPhone, which is pretty incredible. And I guess you can make the case for Apple. I don't know enough about Oracle except that Larry Ellison is a massive billionaire.
And by the way, Apple is building, if you look and see where they're spending their money, they're building factories in India and because India, there's billions of people in India, and they don't all have iPhones. So Apple hasn't cracked the world market yet.
Wow.
What's your take, Paul?
And when they do, so Warren Buffett even said, he goes, if a kid came to me and said, hey, I have $10,000, and what's the one place you would put it? Warren Buffett in an interview said, if a kid came to me and said that, I would tell him to put it all in Apple and let it ride.
Wow.
And that's Warren Buffett. Like
what about Microsoft? What about Microsoft?
And the interviewer said, well, wouldn't you have him put it in Berkshire Hathaway? He's like, he goes, you're asking me a question on a kid with 10 grand. And that's, if it was me, a young kid, 10 grand, I'd put it all in Apple and let it ride.
Wow. What about Microsoft? What? Nobody ever said anything about Microsoft. It's still so big. It's been around the longest. Why don't we like Microsoft?
We do. Microsoft's fantastic.
Yeah, but why isn't it one of our top 6 or 7? Nobody said anything about that.
No, it's probably, for sure, it's top 10.
Top 10, yeah. I would say top 10.
But then, you could diversify a little, and then you can throw in Merck and Eli Lilly, and like us on the phone, we could probably do a fantastic top 25 closed-end fund.
Yeah, I mean, right now, bargain basement prices, we're talking like real deal. Sleeping giants, PayPal, $42. They make billions per year. Another one, obviously, is United Health. That was a $625 stock. The owner got shot, died, went down to $250. You can buy it at $270 today. I don't know if you know this. United Health is 10% of the Dow. 10%. Biggest health. So I would add United Health. Netflix is at a bargain right now. It's at $80. That's another phenomenal purchase right now. I'm just talking like the best of the what they call the meg cap.
Yeah, then there's a stock called Plantar, PLTR, that if we start bombing Iran, it's going to go from $160 to $500 a share overnight.
Oh, you're talking Palantir.
Yeah, Palantir.
Gee.
Yeah, Palantir is like they're not part of the Mag 7, but it's interesting.
Here's a funny story, Lonnie. My son did a thing in high school, Huntington Beach High School, and they had to do stock picks. And he went on AI, and it gave him 4 stocks. Then he typed in, I would like a Defense Department speculative stock, and it gave him PLTR. And at the time, it was $9 a share, so I bought a bunch. And I think I think it's like 160 now.
Nice. Oh, I gotta share this. You guys. Yesterday, again, using Gemini 3, anybody can do this. All you need is some creativity. But I typed in, what are the best current plays in energy, crypto, stocks, ETFs, for generational wealth for the next 3 years? And guess what? They came up with one stock, at least the one stock. It gave me 4 different readings, but the stock that it came in with was MicroStrategy.
Wow.
MSCR.
Yeah, that's this one.
When Bitcoin goes up, by the way, MicroStrategy is going to shoot up. MicroStrategy, by the way, Paul, are you familiar with weekly and monthly high-end or high-yield ETFs?
I'm sorry, I'm having a little trouble hearing you.
Yeah, it's hard to hear you a little bit, but I'm so focused. I can hear you, but I'm like, I can barely hear you, brother.
You just get off the Bluetooth.
Yeah.
Okay, here
Well,
we go.
I'm so focused.
And I
I got my
hear
head
it.
all the way up to my computer trying to listen.
I'll
I'm
end,
like,
I'll
man,
end
this
with
is so
'cause
interesting.
Obviously, but obviously, when I'm sharing, I passionate about this stuff. But they have what they call weekly and high and monthly high yield ETFs. Okay. What they do is they take a stock like MSTR. The ticker on it is Misty, MSTY. And yeah, check out MSTY. It'll blow your mind. It's
MSTY?
Yeah. This is like the new world, you guys. What they do.
MSTY?
Yeah, MSTY. It's like, it's a bullish on MicroStrategy, MSTR. So I want you to see what the yield is. Obviously, it's high risk. Actually,
Okay.
no,
Do I look through that other website?
No, go to open up a tab by itself and just put an MSTY dividend.
And coincidentally, when we say it's high risk, it's no higher risk than trading Forex. So, I mean, everything's in perspective.
There you go on the top, yeah. So let's say set it and forget it. These are funds. They're called yield max funds. They have like dozens of them.
Ready, man?
This is the highest yielding. So what they do is a manager will, on a weekly basis, do covered calls against the stock. The yield on this one here, I think, is close to 100% per year.
Misty, is that the Misty, MSTY?
That's it, yeah. And I'm just giving you like one. And then there's index funds that they do covered calls on, that literally on a weekly basis, like if you invested in it, every Friday, they give you a yield every single Friday.
Wow.
And I can give you the very best ones that I know of. Because
I'd love to research them if you have them handy, or if you want to put it in the chat and the WhatsApp group.
Yeah, check out. I guess,
are these dividends every month, every week, every year? Are they annually, biannually?
Okay, so
what? If you
so
make
the latest, it used to be monthly, or actually used to be quarterly. You know, the stock market for the most part, like these stocks, they're quarterly. A big yield with like a major company is like 4-6%. But this changes the dynamics. This has been around for about 2 or 3 years. Go into distributions right there on the third, on the very top, it says distributions. Click on that. To the left.
Oh, okay. Here, I'm gonna let you control it, Alex. Okay.
Yeah, okay. So in short,
can you share your screen? I'm gonna let you.
Yeah. Okay.
Yeah, share your screen. Or Paul, you can share your screen. I'm listening, but my wife, I gotta start making her a little breakfast.
Let me see how I could do this.
Your poor wife's been looking to eat for 45 minutes now.
Okay, I've got to. I got to keep this short because I'm taking off this morning with my wife. But basically, someone was asking, are these weekly, monthly? Some are monthly, some are weekly. What they do is they write covered calls against the stock or against the index. So, Misty right now is at a bargain basement price. It's probably one of the highest yielding. It's about 100% per year. And then I'll just give you 2 other ones to check out. One's called YMAX. That one is about 50%, but it's an index. That's one of the best to have. That pays weekly. And then another one that's really great is ULTY, ULTY. Those are all 3 of those are yield max funds. And if you want in the near future, I can kind of share stuff because I know the other 5-6 companies that offer these. Round Hill is one of them. That's another great fund, Round Hill. So for the time being, just check out YieldMax funds. You can buy everything from Apple on there to AMD to NVIDIA, and they pay you weekly, most of them. Some of them are monthly. So if you want to have a dividend on a weekly or monthly basis, that's where to check out.
Okay. I'm on it right here. Let me see. And then so I look right
under
here.
Distributions, it's on the top. Yeah, there you go. Those are all the funds. So go see the middle there. Hold on, let me see. Yeah, there you go. The YMAX. Click on that. So this is what's good about this. It's an index. So you've got about 30 companies. Okay, there you go. Hold on. Distribution rate 43.5. Return on capital 59.48. So some of these are giving you return on capital. You can check this out with your accountant. But if they're paying you dividends in return on capital, as far as I know, it's not taxable.
Wow.
So scroll down a little bit more and you'll see the history. A little more.
Yeah, we need to have one day a week where we have like a podcast. Me, you, and Paul on here, man. That would be crazy. That would be awesome.
Yeah, here you go. Distributions. Okay, if you look to the left, every share will give you this last week roughly about 8 cents. So
Wow.
This is on YMAX. So if you have, how much are the shares right now? They're about $10 or $8.50 or $9. They're on. This is a great buy right now. Okay, and here it is. Their top 10 holdings are government, I guess treasuries. And it gives you the percentage on the right side. They've got Meta in here. They have Apple. They have JP Morgan Chase. NVIDIA's on here. You can't lose with this one here. And they're paying you, give or take, about 50% per year dividends. And you can buy the stock for roughly about $8 or $9. So if you have, for every 100 shares, you're going to make roughly $8. So if you have 1,000 shares, it's going to pay you $80 every week. Every week.
Wow.
So this is one of the best, YMAX.
This is awesome, man. I love this stuff. Well, what can go wrong on this one?
Well, everything in life has risk. Obviously the whole market could blow up, but that's, obviously the chances of that happening is pretty small. I mean, the closest we ever got to that in my lifetime is 9/11, where they shut down the market for 3-4 days. But it opened up again and it went up after that.
So that's a great point, because people have asked me over the years, like, well, in 22, the market lost 40%. Weren't you panicking? And I'm like, no, I just bought more. I'm not a seller. I'm a buyer. I'm a long-term buy and hold. So it doesn't matter if I'm in a Fidelity S&P 500 index fund and it goes down 6-8%, 10% a year. They're known the next 2-3 years they're going to crush it. 30%, 27%. I just buy more.
I'm the same mindset, Paul. I love it when I see the market totally red on a given day. Versus
now, when I need the income to retire, I'm going to have a completely different mindset, right? Then I need income, and that's going to be different investments. But I'm not there, and so, but it's my wife and I said it earlier. We say it all the time. It is such a blessing that we decided to kind of live poor and invest in our future. And I can go to bed at night knowing that I can retire. And you don't know the freedom. You want to talk about freedom? the freedom lifestyle, knowing
That
that
is.
someday I can pull the plug and say, I don't need to work anymore, and the dividends off my investments will pay me more money than I made as a mortgage broker. That's freedom.
That's freedom lifestyle right there. You go, Paul. That's freedom
Yeah.
lifestyle.
And some guys on YouTube, they call it the FIRE, FIRE. But when you're in your 50s, 60s, 70s, you don't want growth stocks or ETFs as a whole. It should be a very small percentage. You want dividend yield paying weekly and monthly dividends. Why? Because those are going to pay your bills. And if you're reinvesting it, obviously that you're going to compound, but most people in their 60s and 70s don't have an income stream any longer unless they have a pension. So I manage two accounts for free. One's my pastor, and the other one is a missionary couple. And they're both, I put both of them in Fidelity, and a lot of their things that I have them in is dividend yield. So on one of them,
Because they're not working anymore.
Because they're not working and they don't have an income stream. Plus, they were in ministry and they don't have a pension.
Yeah.
So dividend yield is the answer. If you look at all the Warren Buffett stuff, his expertise and all that, he says dividend yield. That's where you want, especially if you're older in life. So speculation, like what we're doing this morning, yeah, you can make some tremendous money if you know what you're doing. But set it and forget it, dividend yield. So I'm just trying to think. Warren Buffett, what he does is he goes in and he buys stocks at a discount. So he'll buy millions of shares. And then what he does is on those millions of shares, he does something in the options world called covered calls. He makes an extra 1% to 3% per month on all those stocks. Now, if you look at Coca-Cola, American Express, I mean, you're talking, and then he's got Occidental Oil. That's how they keep massively growing year by year, is they write covered calls against their shares. So they're not just, and Coca-Cola doesn't move very much. But if you're talking writing covered calls,
well, Coca-Cola doesn't move very much because it's one of the best dividend-paying stocks out there.
right?
It's one of the sleepers that nobody knows about. And Warren Buffett even said on an interview, I was watching a podcast, and he said, even in 2006 and 2008 and 2022, guess what people still bought? Because it's a cheap luxury, Coca-Cola. It ain't going away.
Yeah, what I was saying is they not only own millions of shares, but they write covered calls against it.
Yeah.
So it gaslights your stock if it's not moving. So in the options world, you can make money whether the stock is literally sitting there doing nothing, or if it's going up or going down. That's the only three directions it's going to go in. So that's what the yield max, the Misty at 100% yield, that's what they're doing, is they're writing covered calls against it on a weekly basis.
I'm going to kid you not, as soon as we get off the phone, I'm going to be knee deep in that rabbit hole for a while today, for sure.
Yeah, and there's obviously there's favorites and there's real conservative. I'm trying to think okay, so here's
what we should probably do is kind of put our list together, so maybe we can huddle and then do what Lonnie said in maybe 2 weeks and do a meeting or a podcast that is this, and have it structured and organized so people can learn from it. I've learned today, and I look at this every day, and I just learned from you.
People are texting me saying, man, this is so much value. People are texting me.
and what's exciting is helping people, so let's do it.
Yeah, I agree. Yeah, that would be good. I want to give right now the hottest, arguably, in the whole stock market is metals and oil. So I'm going to give you one. I want you to look this up. Let me see, where is it? It's one that tracks gold, and I believe it's a Yield Max fund as well. Let me see, Max crypto, Ross Givens. Where's my weekly? Okay, here it is, weekly. Oh, by the way, I'll save it, obviously, because it'll just... Okay, here, GDXY.
GDXY?
Yeah, type that in, GDXY dividend yield. So what it is, it's a gold mining ETF.
Wait, say that again. It's GDXY, JGXY. What is it again?
GDXY.
D as in David, XY. So I believe it's a weekly. Yeah, I mean, look at that. You get paid, you're in metals, but you get paid close to 50% a year. Return on capital is 95%. And then look, go under performance, scroll down.
So the 5% is what they're haircutting you? Is like a fee?
No, that's closed-end funds. This is completely different. Keep going. Go down further, if you could. Under performance, distributions. I'm sorry, distributions. There you go. Okay, so this pays weekly. So you own the stock for $17. It pays you 15.3 per share. The week before that, it was 28 cents. This is very conservative. Metals are going to sky this next year to 2 years. And we're not even getting into the miners. I can tell you a lot about the miners. That's where you want to invest a portion of your portfolio.
I love it. Yeah, I think we do this once a week, man.
At least once a month we do this. Like,
Yeah.
we do our research, we get our little, we could each do not a pitch, but like an information session.
Yeah, and just help people, because people are going to need to know what to do with the money once they start making this money trading. They need to know what to do with it. We don't want people to make a lot of money and go right back down. That's the worst thing. I mean, geez.
Because then they'll quit. They'll quit what was working, because you got to diversify. You have to. And I know with Forex, like Lonnie, you're making 3-4% a day, and that's super sexy, right, to people. But over 30 years, especially if there's younger people on this call, like over 30 years, $500 to $1,000 a month turns into millions of dollars.
Yeah. IULs, annuities. We need to be able to teach them about all this stuff, because this is the stuff.
The key is dollar cost averaging, because you can't predict the market bottom or the market top. Very difficult, as you know, unless you're doing like trading for a few minutes or a few hours. But you DCA, that's what Warren Buffett teaches. So on down days, you're buying heavily. On up days where it's super green, unless you're buying weekly or monthly, but that's like the best advice I can give anyone is just be consistent, find your top 3 or top 5, and just constantly add to that position long term. The S&Ps, the S&Ps, like Warren Buffett was asked, hey, what do you want to do when you pass away? He said, put 90% of my funds into the S&Ps, the index, and 10% into bonds. That was he's been quoted on that multiple times on the airwaves. So the idea there is invest in index funds. Why? They're more conservative. You have a basket of stocks of anywhere from 10, 20, 30, 50. You go to the closed-end funds, in some of them have 1,500 companies. You're not going to go broke in investing in a company that has 1,500 companies they're managing. Anyways, I got to take off.
They don't spread. It's just so everybody knows, they don't spread it evenly across the 1,500. Like, they may have 20% in Microsoft, which is a smart play for you, right? Yeah. The other thing that like the Fidelity S&P 500 fund, their expense ratio yearly is only 0.3. So it's 1/3 of 1% is what the expenses are. All expenses to run the fund.
Yes.
0.3. Like, that's nothing.
Yeah, that's nothing.
And don't invest in bullish or bearish 2x or 3x funds. Those you lose a lot of money on long term. And then on top of that, if like you're talking, like, I don't know if you know this, BlackRock just took $2 trillion outside the US. So they're investing in other countries. But what you could do is you can invest, for example, in India. You can, if you like India, you can invest in their index called the Nifty 50. So always, if you're older, always think index funds versus stocks, unless you just know that stock inside out. And I can guarantee Google, you won't lose if you do a stock. Amazon long term, I think it's going to be off the charts. Apple, the Mag 7, Nvidia, because they have a use case. They're the leaders in that department. Healthcare is huge. By the way, a cousin of UNH, United Health, is a company called Oscar. I think it's OSCR. That's a $15 stock. You guys should all look it up. Anyways, I got to run.
Keep on going up? Do you think Nvidia, are they just these AI chips? I mean, are they going to keep on going up, or is it just a boom right now?
Long term.
I think in the next 12 months, Nvidia is going to give me 80% return, 60 to 80, maybe even 100. It'll double this time February next year. It's just that good of a company.
I've got to run, you guys. It's been a pleasure. I'm signing off.
Right, thank you guys. We'll set this up again, man. That was great. I'm gonna put the recording in the back from the last 2 weeks. But these are great for people to have options what to do. So love you guys.
Absolutely.
God bless everybody, man. Great job. See you guys tonight at 7. Please come to Pablo at 7 p.m. and then in the morning we'll be back on. And then we have our great end of the week call at 7 p.m. tomorrow night with Benavita. We got the millionaire maker himself on the call with us, and he's gonna get us to where we need to take this company to. I know we're all a part of everything. So, man, this is a great community. I love you guys, man. I love the growth and that we have, good things. It's just not about one thing. It's about really helping people and not trying to hold the gate closed and really open it up for everything. So thank you guys for being on this call, and thank you guys for helping us out. God bless everybody. Bye-bye.
God bless everybody. Such a nice time.
All right. Bye-bye.